I am here with Craig Dunkerley, co-founder and CEO of BG Wealth Group, and my name is Rory Bloomfield, and I'm the Director of Property and Business Growth with BG Wealth Group. Always a pleasure to have you on with me, Craig.
Thank you, Rory. Always great to be here.
Great. So, Craig, want to chat with you about some pretty interesting things that have transpired in the stock market, really within the last 24 hours or so. A lot of what we've seen in terms of the news and what's been going on really has highlighted the crash of the stock market and sort of how it's continued to come down. And just as of yesterday, there was an article that was put out by Yahoo Finance that talked about how we've recently actually seen an uptick in the stock market. And it went on to talk about, because we've seen an uptick, is now a good time for investors to get out of the stock market. And depending on people's situation, I went on to talk about, who might be best to stay in, get out. So really, it would be great to get your thoughts on, given we've seen an uptick, is now a good time for someone to get out of the market?
Yeah, okay, Rory. I think everybody has to look at their own situation to decide for themselves when is a good time. Should they be staying in? Should they be getting out? I do know we had a number of our clients actually get out on this uptick and move into some real estate investment and looking at some real estate investment. But when we talk about this uptick, we've talked about the movements of the markets, the fact that it came down from 30,000 roughly to about 18,000 when we look at the Dow. And this uptick you're referring to is basically it pulled back up to about 24. So, and that's typical, as we've talked about a few times, that the market will drop down and then come back halfway. And it actually works the other way too. Quite often when the market goes up, it comes down halfway before it continues. So what I fear more is what will actually happen to the investments that people may be in. I read an article in the Globe just a couple of days ago that talked about Horizon's ETF management company, where they were actually recommending for their clients not to buy into two of their oil funds. And the reason for this is that they saw that in the near future, the funds could actually implode and be gone. And as an investor moving into that, obviously you would lose your investment. So I see this uptick as an opportunity to take funds and get out of a market that may be still at a lot of risk. And not only a risk of dropping and then eventually coming back up, but at risk of, depending on what you're actually invested in. Horizon talked about their ETF, and an ETF is similar to a mutual fund, but it's a low fee investment fund that you can invest in. Similar to this is, depending on what your investments are invested in, where they're invested, are those companies, are those funds actually going to survive through this? So to me, it's a bigger risk to be in this and possibly lose a lot more than the fact that it's going to drop or possibly will drop and come back up. So that's kind of my thoughts on it.
Interesting. Yeah, makes sense, and appreciate you sharing your thoughts on what we're seeing and what we might continue to see in the future. So thanks again for joining me, Craig, and look forward to having more discussions with regards to the markets and what we might be seeing going forward.
That was great. Thanks, Roy.
Thanks, Craig. Talk to you soon.